103.8.
Live from Dubai Commerce City, the region's leading digital commerce free zone.
Let's get more on all these stories now. Chanana is Chief Investment Strategist at Saxo Bank, based in Singapore, but with us here in Dubai in our pop-up studio at Commerce City. Charu, good morning.
Good morning. Thank you for having me.
There are lots for a Chief Investment Strategist to digest this morning. Let's begin with Tesla if we can. Numbers out last night, hotly awaited.
Yeah.
The numbers were awful, but the shares jumped. What's the story with Tesla?
I think this was, just one key thing that the markets were looking for. I think we were well aware that the car sales have not been doing well. They are facing a number of headwinds, but the only savior for that stock yesterday was, Elon Musk really saying that he's going to devote more time to the company and to the functioning of the company particularly, and that's kind of helped. But after a 40% decline this year, a 5% jump still seems very uninspiring. We know the kind of headwinds coming their way from, obviously competition and global growth slowdown potentially. I think there's a lot, and then of course we did not get any guidance, which is I think going to be the line of action for most of the other companies reporting as well because of the uncertainties that we are facing right now. But for Tesla particularly, we know the outlook in terms of its sales and revenues does not look as rosy.
Is Tesla still a darling of traders who use platforms like Saxo and others? Traditionally it was. Still, or is it out of favor?
Actually, it still remains one of our top traded stocks. The top one particularly being Nvidia, and then Tesla coming close second with that. But again, this does not say that a lot of the clients are really buying it because, on our platform, you could either, go long or you could also go short. So the number of trades is certainly high. I would not be able to comment on which direction it goes, but it certainly is, I think, given the kind of volatility we see in that stock, it certainly remains one of the favorites for the traders. Okay,
let's look at the macro picture now. We've got the World Bank meetings happening and IMF meetings happening in Washington as we speak. And yesterday we got the World Economic Outlook from the IMF. It's about as gloomy a World Economic Outlook as I can remember, slashing their global growth forecast, US forecast, Chinese forecast, even the UAE, a relatively strong economy. We got our forecast cut. Let's briefly hear from the chief economist at the IMF now. He's Pierre-Olivier Gorinchat. This is what he had to say about the trade environment, why it's bad, but there is some light at the tunnel.
An escalation of trade tensions would further depress growth. On the flip side, growth prospects could immediately improve if countries ease from their current trade policy stance and promote a new, clear, and stable trade environment.
So he says if the tariffs are reversed, the global economy could well pick up. How are you reading this one?
Absolutely. I think it goes to say that there is a lot of uncertainty. No institution, no company is right now in a position to give any kind of, clear guidance as to where things are going. And that's because of, we know we have a 90-day pause period on the tariff negotiations are going on. We don't know where that will land. Yesterday, we also heard from Trump saying, or Scott Bessent rather, saying that, there is likely to be a de-escalation in the tariff war with China as well. But we don't know the timelines around this. We don't know where the 145% tariff rate on China is going to settle, when it is going to settle. So there is a lot of uncertainty, and that is clearly being reflected in IMF's growth forecast as well. I think we will obviously see it being reflected in the company earnings guidance as we just discussed as well. There's going to be probably scenarios that companies will talk about as to where things could go, but nobody kind of remains in a clear. We know we are on a path down here in terms of growth, but nobody can with any kind of clarity say where we're going to land.
One of the things we look at closely here is the US dollar, because our currency is pegged, the dirham's pegged to the US dollar. The dollar's been very weak, certainly against the Western currencies or the euro and sterling over the past few weeks or so. Where do you see that heading?
One of the most fundamental stories driving the dollar has been, the rotation out of the US. The in-market participants have been concerned again about this growth story, about the volatility, policy volatility and the economic volatility out of the US. And, given how portfolios have been overexposed to US over the last several years, there is certainly a rotation out of the US. And when you want to sell your US equities, you want to sell your US treasuries, the US dollar certainly gets impacted because of that. But the broader story, and something which I would be looking at in the next few weeks and months, is about that credibility of the US, and the trust factor that has started to be heard, because we've seen the treasury yields go higher, but the dollar going lower, which is kind of a divergent trend. It's not the normal trend that we usually get. So I think that's certainly something worth watching. That goes beyond these economic risks and policy risks to something more of a real structural risk at this point.
How's Singapore doing at the moment? If we look at the real economy and trade and these warnings overnight, Dubai, big trading hub, physical trading hub as well with a big port.
Yeah.
In many ways modelled on Singapore with its big port and big airport. How's the mood in Singapore?
Certainly, I think, it is a difficult time for these export-oriented economies, I would say. But for Singapore particularly, I think it is seen as somewhat of a safe haven between this US-China tariff war. And the other things, and I think this is very true for the UAE as well, the advancement that Singapore continues to make on the AI side of things, on the clean energy side of things, I think those are some of the very key structural themes that will likely play out beyond all these, tariff and trade tensions that we are facing right now.
Finally, one of the other things that spooked the market in recent days is Donald Trump's verbal attacks on Jerome Powell, the head of the Federal Reserve. Last night, though, he seemed to reverse course. He held a press conference in the Oval Office. He was asked about his inflammatory comments, or his critical comments about Jay Powell. Let's have a listen to what Donald Trump had to say.
Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
Two questions, Charu, 30 seconds on each. Firstly, Trump saying, I have no intention of firing Jay Powell. How big a deal would it be if he did?
I don't think he's really in a position to do that right now. I think all he's doing is trying to threaten him, either to cut rates or trying to use him as a scapegoat to put the blame on when we see that economic downturn really happening.
Donald Trump says now is the time to cut interest rates in the United States. Certainly, they're above 4%, well above, for example, Europe at just 2% and a bit. Is now time to cut rates?
I mean, if you compare it to Europe, they have had a much worse growth slowdown than the US so far. Their inflation is much closer to their target, again, compared to the US. And given the uncertainties with these tariff wars, whether this really drills down to be a growth scare or an inflation scare, I think we will need to wait for real data to show the impact, and the Fed will need to show the impact, see the impact on the real data and wait for that. So I think the Fed will stay on pause at least until June or so, until we see the real data being impacted.
Charu, great talking to you. Appreciate your time this morning. Charu Chanana there, Chief Investment Strategist at Saxo Bank, based in Singapore, here in Dubai, and joining us live in our pop-up studio in Commerce City. Appreciate your time.
Thank you for having me.